welcome back. Episode, what is this, 10? Episode 10, I think? Episode 10 or 9, I forgot. But anyways, we're going over liquidity runs in this episode. In the previous episode, we went over impulse price swings. And in today's episode, or this episode, we're going over liquidity runs, okay? And also, my mic quality might be a little buns because I'm using the microphone that's actually built into the computer. So my mic might be a little buns. I'm not using my other microphone to where it sounds all sexy and nice. But anyways, if you can hear me and you can hear every word I'm saying, every syllable that I'm saying, if you can comprehend what I'm saying and understand it, I think you'll be just fine, okay? I would literally go run in my other room right now to go grab the mic, but you know what? I'm not even going to do that. Okay, oh my god, it's unprofessional. You're such a bad trader. Anyways, going into liquidity runs, okay? Liquidity runs, okay? It's really based on your narrative, okay? A liquidity run can be based on really anything, okay? But like I said, we talked about impulse price swings in the previous episode. An impulse price swing is following your narrative, and a market protraction is the opposite of your narrative, okay? Or market protraction is basically the retracement before your narrative is really proven, okay? Knowing that, okay, if you expect a bearish impulse price swing, for example, this right here, okay, and you're aiming for this liquidity point down here, that's your liquidity run, okay? A liquidity run is basically where you're expecting price to go, where you want price to go, okay? Where you want price to go in your favor. That's your liquidity run, okay? Because it's your narrative, okay? The reason I'm saying your narrative and your liquidity run is because for somebody else, this could be somebody else's liquidity purge. This could be someone else's market protraction. This little down move here, this could be someone else's market protraction on a higher time frame or some totally different setup. That's probably a swing trade, okay? So you have to understand that. And what I'm saying here is I'm not saying think of other people, like think of other people's narrative, what other people do. Stay on your side of the market, okay? But a liquidity run is if your narrative, Jesus, is bearish, right? Whatever you're expecting price to go to, or whatever liquidity point you're expecting price to go to, whenever it pushes past or goes to that point, that is a liquidity run, okay? That's a liquidity run. But this can also be a liquidity purge. Why? Because someone may have a different narrative for this temporary down move, okay? This is just temporary for them. They want to catch this over here. All that. So you're catching this down move, right? But someone's like, I'll just wait for this down move, then I'll catch the real bullish impulse price, okay? But let's go over a couple examples, okay? Oh boy, this is gonna be pretty rough, okay? Let's start over here. So down here, okay, let's say your narrative is bullish, right? And you're targeting, I don't know, we can say this high here, that high right there. You're targeting that right there. We set that as buy side liquidity. I recently revamped my my trading view tools, like the actual tools, and I'm literally loving them. I'm obsessed with them right now. I'm having so much fun using them. Like I can just draw a box, and I can just select breaker block, or I can select Reaper. I'm just having so much fun with it. Anyways, going back into this, we saw that price came in, you know, took out liquidity here. But anyways, I'm not going to get into, you know, examples. Right? We're not going to do that. I don't want to confuse you, like I said. But our narrative is bullish, okay? All right? Our narrative is bullish. The reason I say it's bullish is because we're always assuming that you're on the right side of the market, okay? The right side of the market is basically the correct side, or you're predicting correctly. That's what I mean by correct side, okay? If this is your draw on liquidity, right? And before we continue, draw on liquidity basically means where you expect price to draw to, okay? Your draw on liquidity, where you expect price to go to, okay? That's what draw on liquidity is. Everyone else can have a different draw on liquidity, okay? You can all be trading the same bullish move, but you may be having totally different draw on liquidities, okay? You can have, I don't know, this high up here. Someone else may have this high right here. Someone else might have that one right there. And look at you, you're going right there. That's all you need, right there. Just right along there. Alright? So, if your narrative is bullish, when price pierces this high, that's your liquidity run, okay? Because that's where you expected price to run to, okay? And there's a difference between a run and a purge, okay? A purge is basically a manipulative maneuver, okay? It basically takes out liquidity before going the opposite direction. I'll go over that in a later episode. Well, how many episodes from now? 2 episodes after this? Yeah, hold on, because it's impulse price swings, then liquidity runs, then market protraction, then liquidity. Right, okay. So 2 more episodes after this are going over liquidity purges. But liquidity runs is when it completely pierces through it, okay? And clearly, from this point here, if I draw this out, I really draw this out, right? And we look, it didn't even come back down. It just shot right through it. It's gone. Do I even have to say anything? It's literally gone. It did not come back down here, did it? Nope. It didn't. So this is a liquidity run, okay? This is a liquidity run. Or a draw on liquidity, where you expect price to go. But mainly a liquidity run. The liquidity run is where you expect price to go, and you expect price to push through it, okay? A liquidity run and a draw on liquidity is the same exact thing, okay? Draw on liquidity, where you expect price to go. Liquidity run, where you expect price to go, but it just pushes through it. Literally the same exact thing. So if you look, right, if your narrative was bearish, I said bearish right here, you could be targeting this low, and this would be your rut. I'm having so many stutters. This would be your, what is this? What is it? Liquidity run. That's what that would be for you. This right here, I'm moving way too fast, but this right here would be your liquidity run. Very simple. I'll go over it again. For example, let's say you have an entry somewhere up here. So I don't know where, but somewhere up here, okay? And you take an entry at this fair value gap. You're using other confluences. You don't know any other confluences yet, because I haven't taught you any other confluences. But let's say you take that fair value gap and you sell it off. And this is your draw on liquidity and or liquidity run, okay? Price runs through it. Bang, okay? Okay? That's a liquidity run. Like I said earlier, liquidity runs can also be liquidity purges. Because if you look, price came and took that out and then rose right back up. Okay? So, it's really based on your narrative, okay? If your narrative is bullish and price comes below that low, this will instead be a liquidity purge. Okay? Because you're expecting price to go higher. But since you're expecting price to go here, this would be your liquidity run. If I can mark it as that. Liquidity run. That's what that would be for you. I'm having so much fun with these trading tools, like really. I'm so glad I changed them all. If I can just, whoop, look at that. You just look at it again, whoop, look at that. Just look at it again, whoop, look at that. Anyways, should I go, let's go over it some more so you can really, so I can really drill it in your brain and you can understand it, okay? Alright, here, right, let's say your narrative is bullish, okay? We're always assuming that you're on the right side of the market, just for psychology purposes. Price goes higher, where are you targeting? Where's your draw on liquidity? Where is your expected liquidity run? Right there. Bang. So this is a liquidity run, okay, for you, based on your narrative, okay? This could be a liquidity purge, based on your narrative. But since we're on the right side of the market, we're always expecting you're on the right side of the market. This is a liquidity run. I know it's gonna take some time. It's kind of hard for me to explain it to you because you haven't gotten to like the not advanced level, but the understanding level. You haven't really gotten it yet. You're getting it, but you haven't gotten it. You get what I'm saying? To where I can explain stuff without having any restrictions and trying to confuse your brain. But this is your liquidity run or your buy side liquidity that you're targeting, and comes right up and bang. But anyways, I wanted to keep this episode really short, because I just need to clarify some things from the previous episode. That's what these next couple of episodes are going to be. Just clarification, and then the next episodes after that are going to be, I'll just show you. So here, we're on liquidity runs right there. And then we have market protraction afterwards. We have liquidity purges, ICT kill zones, order blocks, optimal trade entry, break of structure, institutional order flow, institutional sponsorship, stages of price. Then we move on to the end of chapter lessons, which is time frame selection, top-down analysis, and actually understanding price. These last ones might be probably more than 30 minutes long. I'm just going to warn you right now, these last 3, or really the last 2. The time frame selection might be about 20 minutes, but these might be 40, 30 minutes, okay? I'm just going to warn you. Anyways, enough of me yapping and explaining and, dropping teasers. I'll be in this episode here, and I'll see you on the next one. Peace.